Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about my Robinhood portfolio, currently at $291,828. Cash position of $4,701. I do have another $40,000 in a high yield savings account. So I plan to deploy this money into the market as there's more volatility. Take a look at my positions. I do have Ethereum in our portfolio. I don't plan to continue to add more cryptocurrency to my portfolio, but I plan to hold this long term. First position is Vanguard S&P 500, which tracks 500 largest U.S. companies based in the U.S. This makes up 5.68% portfolio, or $16,302. This is up 48%. Next is Vanguard Information Technology ETF, which tracks some of the largest technology companies. This makes up 5.63% portfolio, or $16,178. I'm up 151% on this position. Next is Apple, which most of the revenue comes from iPhone, as well as other Apple devices, along with some of their services businesses like iCloud, Apple Music, Arcade, Apple TV. That business or service business continues to grow, along with some of the wearables like Apple Watch and their AirPods. This makes up 11.58% portfolio, or $33,255, up 272% on this position. Next is NVIDIA, which makes GPU chips. Their data center business is also growing. This makes up 8.70% portfolio, or $25,212, up 223% on this position. Next is Microsoft, which makes enterprise solutions. They're in the cloud business, personal computing. Also, this makes up 6.69% portfolio, or $19,214, up 151% on this position. I do plan to continue adding more to Microsoft just because they're a solid dividend growth stock. Next is Amazon, which is big in e-commerce as well as Amazon Web Services. This makes up 5.97% portfolio, or $17,140, down 10% on this position. I do plan to continue adding more Amazon to my portfolio. Next is Alphabet Class A shares, which has voting rights. Majority of the revenue is in online advertising, and especially when companies are spending less on advertising dollars, Google will be impacted by that. But I think among the other advertising companies, Alphabet or Google is one of the larger ones. So even though it is impacted, when there is a rebound from this recession, Google will be picking back up. So this makes up 2.79% portfolio, or $8,000, up almost 90% on this position. Google Alphabet Class E shares. This makes up 2.63% portfolio, or $7,500, up 60% on this position. I've been adding more Alphabet to my portfolio. Next is Visa, which is big in payment processing. This makes up 4.89% portfolio, or $14,037, up 78% on this position. Next is Johnson & Johnson, which is big in healthcare, whether it's pharmaceuticals, consumer, or medical devices. This makes up 3.59% portfolio, or $10,295. It's also a pretty solid dividend stock, and it's not as volatile during uncertain times. This makes up 37% portfolio. So as you can see, past year up 11%, past 5 years up 28%. So there's not as much volatility, but it's a very steady dividend stock. United Health has been doing very well recently, makes up 3.51% portfolio, or $10,081, up 206% on this position. So they're in the healthcare payer space as well as consulting. This is up 21%, past 5 years up 152%. So it hasn't really dipped with all the recent volatility. Mercado Libre, which is big in e-commerce and payments in the Latin America space, whether it's Argentina, Brazil, Mexico. This makes up 3.25% portfolio, or $9,332, down 10% on this position. I have been adding more Mercado Libre to my portfolio because I think there's a lot of growth in the Latinx market and e-commerce. There's a lot of opportunities for growth in that market. Taiwan Semiconductor Manufacturing Company. They're actually recently spiked because Warren Buffett has a position in TSM. This makes up almost 3% portfolio, or $8,599, down 1%. I do plan to continue holding TSM long term. I might also add more to my portfolio. McDonald's, which is a restaurant chain, makes up 2.86% portfolio, or $8,218, up 70% on this position. So you can see McDonald's has been doing fairly well past 5 years. Costco, which is a retail warehouse space, and a lot of the revenue is from subscription, and you could like from their membership. And this makes up 2.61% portfolio, or $7,482, up 114% on this position. And I do see Costco growing long term, whether during good times or bad. People do want to seek value, and the Costco membership, Costco business is a great model. Tencent, which is a company based in China, big in fintech, online, social media, gaming, makes up 2.46% portfolio, or $7,060, down 24% on this position. So a lot of these Chinese tech stocks have been taking a hit. You can see it got hit really badly. At one point it was almost $100. Now it's $36. But I do plan to continue holding long term. There is a lot of risk in these Chinese tech stocks, but I do plan to hold long term. Meta, which is the parent company of Facebook, Instagram, WhatsApp, Oculus, virtual reality. And this stock was heavily hit from all-time highs. This makes up 2.47% portfolio, or $7,094, down 39% on this position. Most of the revenue comes from online advertising, and you can see that they're investing more heavily in virtual reality, metaverse. This is a riskier stock compared to Google, but I do plan to continue holding this position long term. Home Depot, which is in the home improvement space, makes up 2.32% portfolio, or $6,647, up 90% on this position. I do plan to continue adding more Home Depot to my portfolio. Berkshire Hathaway is a large holding company started by Warren Buffett, owned by Warren Buffett. Most of their companies, they own a lot of wholly owned or partially owned companies like Apple, Bank of America, among others. This makes up 2.09% portfolio, or $6,007, up 67% on this position. Alibaba, which is another Chinese technology stock. As I mentioned, this is another very volatile, risky play. This makes up 1.94% portfolio, or $5,577, down 54% on this position. So even though I'm down, I do plan to continue holding long term with the risk. Disney, which recently surged with Bob Iger stepping back in after Chapek got fired. So I do have a lot of optimism with Disney given a new leadership, and they do have a lot of opportunities for growth for their Disney Plus streaming service. And I think as the appetite to travel and be outside continues to grow, Disney will benefit because of their entertainment and parks. This makes up 1.92% portfolio, or $5,511, down 9.74% on this position. I do plan to continue adding more Disney to my portfolio. Next is Boeing, which is in the aerospace industry. Makes up 1.83% portfolio or $5,250, down 22% on this position. I was considering selling my Boeing shares, but I'll hold it long term. We'll see how it goes. CrowdStrike, which is big in cybersecurity, 1.72% portfolio or $4,945, down 10% on this position. I will be adding more CrowdStrike holdings to my portfolio just because I think cybersecurity is one of the last things to be cut when it comes to businesses. PayPal, which is in the fintech space, makes up 1.67% portfolio or $4,800, down 27% on this position. I do think PayPal is oversold. You can see past 5 years only up 5%. But during times of recession, people will have less money to spend and transfer, so PayPal will take a hit. Adobe, which has solutions in creating digital assets, makes up 1.59% portfolio or $45.78, down 17% on this position. I do think Adobe is oversold as well, so I will be adding Adobe to my portfolio. Shopify is big in the e-commerce space, makes up 1.52% portfolio or $43.55, down 55% on this position. See, it took a big hit. It's down 76% this past 5 years. Oof. It was down from 166, so it's really, really heavily hit. AT&T, similar to Boeing, I did plan to consider liquidating this position at a loss, but I'm still thinking through it. This makes up 1.24% portfolio or $3,552, down 44% on this position. Next is Block, parent company is Square. Similar to PayPal, I think with people spending less and less money transfers, Square will be taking a hit. Makes up 1.2% of my portfolio or $3,228, down 60% on this position. And you can see it took a big hit, very similar to PayPal. Next, Sarah Energy. This makes up 1.06% of my portfolio or $3,057, up 93% on this position. The Trade Desk, which is also big in online ads, similar to Facebook and Google. This makes up 0.52% portfolio or $1,497, up 41% on this position. Twilio, which has a lot of communication web services, makes up 0.21% portfolio or $589. I'm down almost 80% on this position. Next is Teladoc, which has telehealth services, makes up 0.27% portfolio or $779, down 69% on this position. So both Teladoc and Twilio heavily hit, but I do plan to continue holding long term. Last but not least is Baozun, which is the Shopify of China. This makes up 0.17% portfolio or $501. I'm down almost 88% on this position. I did consider selling Baozun, but I'll hold for long term for a while. That's all for my Robinhood portfolio. What are you holding and what do you plan to do with your portfolio? Comment down below. Remember to use my referral links below and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more investing, subscribe to this channel. See you in the next video.